Fubo. What's going on with Fubo? Will it keep moving? This stock was up 17.5% here today, up over $12,000 in the public count on this stock. Rolling, baby, rolling. So, Fubo, if you watched last night's video on the main channel I put out, right, I covered Fubo, and I covered what's going on, phenomenal news for their business model and whatnot, right? And if you watch that video, what did I tell you about the stock price and its reaction yesterday? I told you it made no sense. I told you there's got to be some manipulation going on. My guess is, I have no proof of this, okay? My guess is, I've been doing this for 17 years, I've seen a lot of crap, okay? My guess is, because Fubo came out with those preliminary results, no one was expecting that. So my guess is people had puts, they got screwed, they probably found a way to manipulate the stock down, is my guess, right? These Wall Streeters can make things happen, especially, Fubo's only $1 billion some market cap, so for hedge funds to play games, they probably played games with it. They wanted to make sure they got that stock down that day. Then maybe they switched the call side, and then today happens, right? And the stock explodes up. I mean, the stock at one point was up like 20%, just ridiculous, right? And what I tell you yesterday, I said, do not be surprised at all if you see continued momentum in that stock this week, and the stock goes well over $4. What happened? Exactly that happened. I'm not surprised at all with what happened, because it made no sense for that stock not to be up huge yesterday. Yesterday, the stock should have been up 20%, easy. Fubo stock yesterday should have been up 20+%. The fact that it wasn't was extremely fishy. And the fact that the stock moved up and then moved down, nothing made sense. And that's why I told you guys, do not be surprised. And then sure enough, they started buying it right out of the gates. And then it kept the momentum going, kept the momentum going, kept the momentum going. Don't be surprised if the momentum keeps going, by the way, in regards to Fubo there. But, it just cracks me up, man. The games they'll play. The only good news is I've just been in this game so long that I can see through their games now at this point in time, right? And obviously I'll let you guys know about that, and sure enough, it's exactly what I thought was going to happen there, right? Now, I posted this on X yesterday. I said Sofi wants 30, Fubo wants 5, AMD wants 200 soon, and I asked for folks' opinion on my X page on what they thought was coming first. But my opinion's kind of been Fubo wants it first. Given the numbers that are coming out for this company now, given that we're probably really starting to get really close to that deal being wrapped up with Disney for Hulu plus live TV, my guess is Fubo gets there first out of those three stocks. But I mean, all three are animals right now. Okay, so that's Fubo. That's what's going on there. And what do you do about, before we get into Sofi here and the great news I have for Sofi investors, what do you do about a situation like that? As an average Joe investor out here, a retail investor, a little guy. What do you do about a situation that happened with Fubo yesterday where, in my opinion, it was manipulated down, and then today they let it go flying? What do you do about that? Absolutely nothing. Who cares? If you're a long-term investor, who cares? At the end of the day, these stocks are going to move where you want them to move over time. Where you get into trouble is trying to play call options around these stocks, margining out money. That's where you can screw yourself. Because if they manipulate these stocks certain ways that they want to manipulate them, right? And you got call options and they all expire worthless, you're screwed. You are super margined out heavy and you also get margin called in your portfolio, boom, boom, boom. Then you're in bad situation, right? As a long-term investor, I just look at it and I laugh and I say, okay, I see through your games. Like, I know what's going to happen on this other side of that, and that's going to be fine with that. Did I go out there and buy call options and play call options on Fubo? Nope. I wasn't buying call options yesterday or today, even though I thought was what was going to happen, and it did happen, right? I'm not going to go out there and stress myself with call options because who knows? Maybe they could have manipulated it down again today. Like, I don't know. I thought they were going to have it fly, and that's what I shared with you guys in the video, and sure enough, they had it fly. But I'm not going to stress myself out and try gambling money around because there's a short-term outcome that I think is going to happen. Like that, I'm okay. I'm doing my style works just fine. Like, tomorrow I'll probably be up six figures, multi-six figures across my portfolios. I can't complain. Like, I make six figures, multi-six figures in a day. I'm good with that. That's fine. I don't need to get every call. I'm not going to play all these calls and in and out. No. We're bigger than that. We're doing bigger and better things than that stuff, okay? Sofi, next up here. Great news for Sofi shareholders. Great great news for SoFi shareholders, okay? Which, by the way, SoFi has been a heck of a stock. We're now up 163% on the stock in the public count, $8.30 cost basis. I'm so happy I got to 5,000 shares of SoFi. It's now a six-figure position in the public count, which means it's now a big dog position. If you make it to six figures in the public count, you're big time, okay? Listen, SoFi, obviously, they did the $1.5 billion stock plan sale, right? People freaked out over this. I mean, they were losing their minds. I read the post on X. People were cussing out Anthony Noto. They were so mad at him. And there was a lot of retail folks. It wasn't like Wall Streeters were all complaining. No, it was average Joes were freaking out about the share dilution there, right? No, part of that I understand, and part of it I get it, right? Like people don't like to be caught off guard like that, right? The second part of it was people went too far. I mean, the way they were cussing him out, telling him he's a nobody CEO, doesn't know what he's doing. I mean, this stock was a $6 stock just, a little over a year ago. And now it's in the 20s. The numbers are extraordinary. The revenue growth is 40% plus. Who are you to tell Anthony Noto he doesn't know what he's doing? You could be unhappy on the messaging and the way it was delivered. But I could take you to the same. I could take you on a different argument, and I could say they could have announced a share dilution at the same time as they came out with earnings. Okay, what's everybody going to be talking about then? The share dilution. So then you just take the full focus off of earnings. So that's something else. That's another side. Anthony Noto. You remember he used to be, a pretty high-ranking person at Goldman Sachs, right? He used to be the CFO of the NFL. He was super high up working for Twitter back in the day. Man kind of knows a thing or two, right? He knows a little bit. So if you come out with the dilution at the same time you come out with earnings, it could end up in a situation where, the average Joe is not even paying attention to earnings. They're only talking about the share dilution. Because guess what happened when the share dilution was announced? That's all everybody was talking about. At least there was a time period where people got to focus on the 44% revenue growth, or 42%, or whatever it was. It was 40-something% revenue growth rate. The extraordinary EPS. The diluted EPS came in at like 8 cents versus 1 cent this time last year. I mean, the beats were incredible. And so at least everybody got to focus on that and then talked about the share dilution, right? What's my opinion on it? The whole share dilution? Listen, I don't love it, but at the same time, I put my trust in a CEO to make the best decisions for the company. And if Anthony Noto believes the best decision for the company was do that dilution, $1.5 billion, right, and put the company in a way stronger cash position, I trust him on it. No different than if Zuckerberg wanted to, raise money. Like, there's no reason for Zuckerberg to do it because they make so much money, it's ridiculous, right? But if you did, I'd be like, okay, I trust Zuckerberg. Like, Zuckerberg right now is spending ridiculous sums of money that he could be using on share buybacks right now and paying out dividends to shareholders like me. He's spending ridiculous sums of money on, NVIDIA chips right now and other things for infrastructure. Who am I to question Zuckerberg, right? I think the guy's done okay for himself. He's got, a $2 trillion company? I trust him. And that's the sort of level of trust you need to have in your CEOs. If you don't have that level of trust, you're in trouble. You're in a lot of trouble. So when Anthony Noto says, I want to do this, okay, I get it. I love it. I don't love to be diluted as a shareholder. But if he believes that's the best thing for SoFi's next several years, all right. I trust you, Mr. Noto. I trust you, right? Now, it was hilarious because everybody cussed out Anthony Noto. They freaked out at them. I shouldn't say everybody, but a lot of people did, right? They were upset. Oh, boy, were they upset. All for what? The stock finished down 2% today. The stock's up after hours right now. We could be in a situation where SoFi reverses all those losses. It was like a 7% plus move, only finished down 2. Let's say tomorrow we're up 2 or 3% on the stock. We'll reverse the whole move. And everybody freaked out for what? Right? And guess who called this? Last night, inside the private stock group, I posted 5:57. I said, I would not be surprised if the dip ends up being bought up fast. I said SoFi is one of the hottest games in town, probably a top 10 most exciting stock in the market.
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
What's going on with Sofi? Well, big stuff. This stock is not just moving up double-digit percentage by accident here today, okay? Sofi raises their 2025 guidance after blowout Q2 earnings. A headline like that, you got it, man. When they're calling your quarter a blowout earnings, oh, baby. SoFi stock jumped more than 10% Tuesday pre-market trading after the lender and banking app company boosted its 2025 guidance by a hefty margin following stronger than expected consensus Q2 results as loan originations climbed 64% year over year. The company now expects 2025 GAAP, generally accepted accounting principles, EPS of 31 cents versus 28-cent consensus, compared with the prior range of 27 to 28 cents, much better than expected. Adjusted revenue is expected to be $3.375 billion versus consensus of $3.29 billion. Its previous outlook was 3.23 to 3.3, so we say about 3.28 mid-range there, right? Adjusted EBITDA guidance was raised to $960 million from earlier estimate of 875 to 895, so 885 midpoint there, now taking it up to 960 for adjusted EBITDA. Phenomenal. SoFi's Q2 spotlight was the 72% year-over-year surge in fee-based revenue. Fee-based revenue is what's taken off like a rocket ship for SoFi now at this point in time, now making up 44% of total revenue, a clear signal it's shifting from a lender to a platform-first business. This structural mix is unlocking margin scalability and de-risking the model. And that's, I think, one of the most beautiful things about SoFi is you're getting a kind of a perfect situation where revenues are exploding, the margins are seen as getting better and better, and all simultaneously, people are looking at the business model as being less risky than it had been previously, than if they were just taking on the risk of all these loans, right? Not worrying about selling them off to others. So SoFi is getting more fintechy, less banking, I guess we can say it. That would kind of be the best way I would phrase it, at least. Okay, less banky, more fintechy. Phenomenal, right? And that's where people really want to see this company go. Now, if you don't, by not taking the banking risk, you might not make as much money, but you're also not taking all that risk, right? So why not sell off those loans to somebody else that would be a happy buyer of those loans, right? Q2 adjusted EPS of 8 cents, topping the average analyst estimate of 6 cents, rose from 6 cents in Q1 and 1 cent in last year's Q2. Q2 adjusted net revenue went to $858 million, beating the $804 million consensus. That is a blowout number there, right? It jumped from $770 million the prior quarter and $597 million on a year ago basis, okay? Now, look at this. This is what Anthony Noto says here. This is his exact quote. He says, "We accelerated adjusted net revenue growth to 44% year over year, the highest level in over 2 years, driven by a record high new members as well as new products and increase in fee-based revenue." This is the perfect definition of everything's going right across the board. Like, everything is going right across the board for SoFi right now. Everything. I mean, you just look at everything and it's like, it's literally almost impossible to find a hole in this business model right now. Everything is going the way they would want it to go. In a time period when if you looked at the business climate, you looked at consumer sentiment, it hasn't been good. Think about this quarter they just reported. They just reported a quarter that, remember, consumer sentiment was in a dumpster fire. during that quarter, right? And all the tariff stuff and all the worries and the market scare and all that. And yet, I mean, you would think it's the strongest, best economy in history. Everything's perfect. You would think the consumer sentiment's the highest ever by looking at SoFi's numbers. Net interest income came in at $517 million, exceeding the 509 estimate, climbed from 498. Look at the origination volume. That went to $8.76 billion. That was up 64% year over year. Personal loan originations came in almost $7 billion. That was 66% up. Student loan originations, $993 million, which increased 35%, and home loan originations, $798 million, which soared 92%. Now, once again, if SoFi was taking all the risk with these loans and wasn't worried about selling them off to others, I would be like, okay, this is great, but what happens if the economy gets bad? What happens if people don't pay these loans? Things like that. When SoFi keeps selling off these loans, which seems like that's a lot of their focus, I'm like, okay, sweet. Like SoFi's getting all these fees and then they not having to take a risk of a lot of these loans. I like that a lot, right? Q2 adjusted EBITDA came in at $249 million versus estimates that were around $210. That was from the previous year of $137 million. What a difference in adjusted EBITDA, right? Number of members rose to 11.7 million from 10.9 million. That's insane. Just on a quarter-over-quarter basis. They grew members 800,000 on a quarter-over-quarter basis. And on a year-over-year basis, look at this. They were at 8.8. So they grew members almost 3 million versus this time last year. What? Deposits came in at $29.5 billion versus $27.3 billion just in the previous quarter. That's insane as well, man. Oh my gosh. SoFi is clicking on all cylinders. Now, here's the deal with SoFi. You know, we look at analyst estimates and, you know, compile those and kind of get like an average estimate on 1000xstocks.com, right? And what we were finding is analysts were kind of expecting current year revenues to be up around 25%-ish, somewhere in that range, and next year around 20%. Based upon the number SoFi just did here, right? Based upon this revenue increase of a 40% plus number, right? I believe analysts are going to have to start coming way up on their revenue expectations and their EPS expectations. Now, not only that, we're going to have that hit first, but you know what's going to hit second? Analysts are then going to have to come out and start upgrading SoFi and bringing up their share price targets substantially, because now SoFi has climbed above, you know, like the far majority of these guys, basically price targets. So people are going to have to keep bringing up price targets, They're going to have to bring up substantially over this next month or so what their expectations are for SoFi's revenue, not only for this year, but likely next year, as well as EPS. And what does all that mean for the stock price? It means very, very good things for the stock price. Like, this is a great situation. Not only that, you know, a member of my prep stock group in the SoFi chat was busy today. So was in the Fubo chat and the PayPal chat. Obviously, a lot of people talking about those stocks inside my prep stock group here today in the Discord chat, right? But you know, one of our members posted this. Andrew Jeffrey from William Blair recommends to buy SoFi regardless of any pre-market rally, and he issued a $30 price target on SoFi. Now, this analyst is not just a joke analyst. He's ranked number 178. Now, you might say 178. That sounds bad. Not really. That's 178 out of 9,927 Wall Street analysts. So this is actually one of the far better Wall Street analysts. I like that. Like, you know, if this was some analyst that had, you know, was ranked number 9,000 out of 990, you know, like then I would be worried, right? Or if it was an analyst ranked 7,000 out of 10,000, I'd be like, okay, this doesn't mean much. But an analyst ranked this high, I like that. I like that a lot, right? Now, you know, I posted this inside the private stock group's Discord chat. I said, it's an absolute shocker of a quarter. Loans and origination, 738 versus 621. Total interest income, 792 versus 674. Now, additionally, if you look at interest expense, they kept that very in check. Interest expense, total interest expense only went to 274 from 262. That's not bad at all. That's only about $12 million of extra interest expense on a year-over-year basis. That's nothing. Net interest income, one of the most important metrics anybody ever looks at when it comes to banking-related companies, right? NII, $517 million versus $412 million in the same quarter last year. So that was up, $105 million on a year-over-year basis? And crazy. Now, Non-interest income, they blew those numbers out of the water. Loan origination, sales, securitizations, and servicing, 70 million versus 61 million same quarter last year. Technology products and solutions, almost 91 million versus 85.8 million. Loan platform fees, this is the one that's going crazy for SoFi right now. Loan platform fees came in at a shocking $127 million versus $12 million in the same quarter last year. Other non-interest income came in at 48 mil versus 26 mil. Total non-interest income came in at 337 versus 186 million in the same quarter last year. Total revenue came in at 854 versus 598. Then they have their non-interest expenses here, which they kept fairly in check as well. Income before income taxes climbed to 112 million versus 15 million in the same quarter last year. Net income climbed to a shocking $97 million compared to $17 million in the same quarter last year. EPS on a diluted basis came in at 8 cents versus 1 cent. Unbelievable. It's an 8. Guys, this is crazy. I have not seen a company turn around their financials this quickly since, you know who? Palantir. Palantir was the last company to really turn around their financials and get themselves to a place where they went from reporting like F grade, D grade, C grade type income statements to now having like A plus grade income statements. Like when you look at Palantir's revenue growth, EPS growth, net income growth, when you look at their margins on the top line and on the bottom line, the gross margins, the net margins, they're shocking. This is Palantir-esque, what SoFi is executing here. Like SoFi's financials, you go back, a few years ago, it was ugly. They were taking massive losses. Those days are long gone. And now there's companies, starting to have serious money hit that bottom line. And it all bodes very well for SoFi stock price. And that's why people are willing to buy this stock up today. Even with the market kind of conditions the way they were today, right? Even with, the stock being up significantly, people are like, things are so good at SoFi, I'm willing to pay up for that, right? Now, member of my private stock group, we had, members of the private stock group sharing their 1000x projections on 1000xstocks.com. We have a whole projections tab where you can run projections on where a company's going over time based upon your revenue growth expectations, net income growth expectations, what's a fair PE given those growth rates, and then it'll spit you out what the compound annual growth rate will be and what the stock price will be in future years given your particular situation, right? So one of our members, shared this here today, kind of his base case for SoFi, right? And if this base case were to come true, which I think it's pretty practical, this isn't like some crazy, base case here, especially given that SoFi's now grown revenues, 40% plus. He hasn't grown 30%, 26, 27%, 27, 24%, 28, 21%, 29, right? Net income growth of 35% on average per year, 27 through 29. I mean, these aren't like, oh my gosh, this is like the craziest thing ever, right? And if you're growing top line 20% plus, bottom line 30% plus, right? 50 to 70 P is very fair. That puts the stock somewhere between about $70 and about $100 there, right? Come 2029, which would be a crazy investment opportunity still, even buying SoFi today. That's the thing. It's not like, SoFi used to be $6. Like, I wish I would have bought it at $6. It's like SoFi could still be an extraordinary investment opportunity from here if they pull off these sorts of numbers, right? Now, the one big risk factor in regards to SoFi, right? Because, you could even say this base case is very modest. I mean, with them pushing growth rates now up to 40% plus, who's to say they can't replicate that and do that for the next year or two? Like, could SoFi post a 40% plus revenue growth number in 26 if the economy's in a better spot than it was this year? SoFi could literally easily, if the economy actually gets better next year, which is debatable if it will get better or worse, right? But let's say hypothetically the economy gets better. The average consumer gets better. They feel better about buying home, taking out a home loan, auto loans, loans in general, things like that, buying stuff, right? Let's say the economy is better next year than it was this year. Is it possible SoFi could report full year revenue up 40% plus next year? Absolutely. Which means then 27, what are we doing then? Is the economy worse or better? If it's even a little better than 26, could they come in with another 40% plus number? Yep. Look what they're doing in what people would see as not even like a strong economy. And look at the numbers they're putting up, right? 40% plus. But what's the big risk factor for SoFi? Let me show you the big risk factor for SoFi stock. And everybody's got to take this into account. I said, fair, reasonable view based upon previous trends and where the business is at. But if a major recession happens in the next few years, that could alter numbers significantly. But that could be said for all banking-related companies, right? And we were kind of chatting about that a little bit and what's a fair, net income, CAGRs, P ratios, things like that, right? But the moral of the story is here in regards to SoFi, if a major recession happens in the next few years, SoFi's growth rates would get hit heavily in the short term, right? And that would be not fun. But that could be seen for all companies, right? And there's also the other flip side of that. What if the consumer's a lot better next year than they were this year? And then they were in 2024, right? That could mean very good things for somebody like SoFi. So, there's a risk factor of, if a big recession, that could alter growth rates, for a year or two. But there's also the upside of, what if things got actually a lot better? And here's the thing, if you're bullish on the Trump economy, right? If you really believe in the Trump economy and he's going to have this great economy, right? His economy really starts in 2026. So if you are of the belief that all these changes and plans and the tax changes and regulation, all this stuff is going to mean great things for the economy, you should start to see that in 2026. And that would mean great things for 26, 27, 28. But that's, everybody's got a different perspective of that. Some people might think the Trump economy is going to be bad. Some people might think it's going to be a great economy in the next few years. So all I'm saying is if it's even a better economy, oh my gosh, just wait to see what SoFi's numbers are. How many people are actually buying new autos right now? How many people are actually buying homes right now? We've looked at the numbers recently. They've been down at great financial crisis type numbers, right? How many people are going to spend $10,000 in new furniture right now and take out a loan for that? People aren't doing that stuff right now. They haven't done that for the last couple of years now. What if that stuff starts to return? What if people start buying boats again? Jet skis, ATVs. What if that actually happens? What are SoFi's numbers going to be? Keep that in mind, right? So now, where's SoFi stock headed from here? Here's the deal. SoFi stock's headed to $30 to $50 until we get a risk-off market. When we get a risk-off market, which that's debatable, does it happen a month from now, 2 months from now, 3 months from now, 6 months from now, a year from now, 2 years from now? At some point, we'll have a risk-off market. We'll have a nice size correction in the market, right? But until that time, SoFi will run to $30 to $50. That's my opinion on this. I think there's going to continue to be a lot of momentum. I think there's going to continue to be a lot of people. Where else are you going to get a fintech growing 40% plus? That's it. SoFi's not even tied to crypto yet. Now, they want to get more involved in crypto over this next few years, but they're not even tied to that. That's a great thing about SoFi. If you look at the other fintechs, right? Really, the only other exciting fintechs that would come to mind would be Robinhood and crypto and Coinbase, right? But here's the thing: people look at it with Robinhood. They say, okay, the stock market's been in a bull market for almost 3 years now. At some point, this bull market will break. Robinhood, will go down in that situation. They're probably right about that, right? When does a bull market break? That's anybody's best guess. Coinbase has benefited exponentially from Ethereum going up so much over the past few years and Bitcoin as well, right? Eventually the cycle will break and Bitcoin will have a big downfall and so on, Ethereum, altcoins and all that stuff. When is that? That's debatable. Could be 3 months from now, could be 3 years from now, right? But the moral of the story is those are really tied to the stock market and crypto. You look at SoFi, they're much more of a diversified business, so people say they can put up numbers regardless, right? So SoFi, in my opinion, is the most exciting fintech type company you're going to find in the entire stock market. There's nothing you'll find that's more exciting than that in terms of top line growth, bottom line growth, CEO has his head on straight, right? And not being overly reliant on the stock market going up and not being overly reliant on Bitcoin going up. That's the magic here, folks. So am I planning on selling any shares of my SoFi stock in the public account? I have 5,000 shares. I've made 188% on the stock in a pretty quick amount of time. I have some batches that are up 245%, 247%. Am I planning on selling any of my 5,000 shares of SoFi? The answer is absolutely not. Absolutely not. There will be a day when I want to sell some SoFi shares. It's not today. It's not tomorrow.